Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 19th of January. Starting off with critical metals, where we've had a gap through the December resistance. That was around the 7 pence level, and an end-of-day close above 7.2, which was that peak of last month, and hopefully we'll see the shares move on their way. As I said over the weekend, gaps through resistance, normally the sign of a multi-bagger. We already had one last month, so this stock does look to be quite a powerful bullish situation. Next up is Dev Clever, where there's an ongoing bull run for the shares, seems to be actually gathering momentum. The latest detail, I suppose, was the break of the late December peak at 15.5 pence, and really motored since then. Also, we're above now that resistance line from January last year, around the 21 pence level, and while there's no end-of-day close back below that, we should move quite quickly towards that red March resistance line projection, currently promising a target as high as 40 pence, hopefully as soon as the end of next month, and the way things are going, but perhaps even the end of this month. On to Iron Ridge, and here you can see that we had a gap through resistance. That was, I suppose, around the 20 pence level, so an end-of-day close at 20 pence plus. Not only should open up the prospect of a top of March 2020 price channel target as high as 30 pence by the end of next month, but also once again would signal that this stock is a potential multi-bagger situation, in the category of being one of the most bullish types of stock on the market. Jangada has been requested quite a few times in the recent past, and not surprisingly, given the setup that we've had. In fact, here we had in October a gap through resistance, and that was around the 3.8 pence level. We haven't really looked back since then. Now approaching double that particular number, and with a fair wind, hopefully by over the next, I suppose, 1 to 2 months, maybe even by the end of next month, we could hit the top of that June rising trend channel from last year as high as 12 pence. This stage only really well below the floor of the rising trend channel from last year, just under 5 pence, really delaying the upside scenario. Another very strong looking stock, and trying to narrow it down really to the most strong, given that almost everything's going up at the moment. Here we've got Metals Exploration gapping through the initial high of January at 2.14 pence, and while we're above that, looking forward hopefully to a target as high as 4 pence by the end of next month. As I said, the could be much more given the way that we've gapped through resistance, which is normally only seen in the strongest of situations. Recovery mode very much in evidence at the moment at Okio. Here we've got the shares just approaching that resistance on the way down from October. That was a 13.39 pence peak, so end-of-day close or weekly close above that hopefully will then open up the prospect of a top of July 2020 price channel target as high as 23, maybe even 24 pence over the next couple of months, maybe by the end of March. Only back below the initial resistance for January around the 10-11 pence level, really delaying the upside scenario. Stock which everybody seems to be claiming the credit for at the moment, Pineapple Power, and doing rather well. I think it's beaten the initial target that was suggested here around 9 pence. Next stage, hopefully up towards the top of a rising December price channel at 14 pence, and that could be seen hopefully as soon as the end of this month. The upside target on the upside basically valid while we hold above the initial January resistance for the shares at 6.15 pence, which at the moment seems pretty easy. We've had a very strong candle today, opening at the low and closing, and so far near the high of the day, so looking pretty strong indeed for that 14 pence target. Another strong stock of late is Pires, revving up again now after a couple of days of consolidation. We had the initial 18 pence target, which was just missed at the end of last week, so second go on that, and end of day close above 18 pence, or a weekly close above 18 pence, could then open up the prospect of an end of February price channel target as high as 25 pence for the shares. Upside valid while we hold above yesterday's floor at around 12.5 pence. So above that, looking for as much as 25 pence for Pires. Stock which is also in the ultra bull category at the moment. Petroneft, here we had, I think I've suggested at the weekend actually, but here we had the gap through resistance, so possible, I suppose, entry around 0.8 pence on the open of yesterday, and great follow through today, just hitting that initial target around 1.2 pence at the April resistance line projection. So trying to work out where the next destination for Petroneft might be. Best call at the moment would be that we will hit a line of resistance from June 2019 around the 2.2 pence level, and that could be seen as soon as the end of next month. Only back below, I suppose, the 1 pence level, really, on an end of day close basis, really delaying the upside scenario for Petronef, but don't really expect that to occur. Very strong setup here again with the next situation, Skin Biotherapeutics. Here we've got a situation where the shares are in a very strong looking consolidation based at the old resistance for the stock, August resistance around 28 pence. So above 28 pence on an end of day close basis, looking towards the top of a broadening triangle from March last year. Currently promising a target as high as 55 pence as soon as the end of next month, and obviously that would be triggered or accelerated by a quick break of recent resistance around 36 pence. Just a couple of stocks to go now. One stock which has taken a long time to get off the ground, but looks like it's starting to accelerate after a very extended consolidation from March through to January, and a few false dawns in there as well, which is always problematic and rather irritating. The situation now is that while we're above 0.3 pence, looking for 0.6 pence for tertiary minerals at the top of that February rising trend channel from the beginning of last year. Only really back below the 50-day line, 0.25, really delaying the upside scenario. Finishing off with a stock which is looking and has looked very promising of late. Zephyr Energy just breaking to the upside now, breaking that December peak, the intraday high there at 1.05 pence, and end of day close, a weekly close above that, and we should be on our way towards 2 pence at the top of that rising August trend channel, and that could be hit as soon as the end of next month. Upside valid at least while we're above the floor of the rising trend channel from last summer at 0.9 pence. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.